Hi Crypto Peeps, hope you're doing well. Today's date is 11th January 2023 and to be honest, things are looking up. Crypto, well let's say Bitcoin at the moment is above 17k, it's 17,412 at the moment, so it's on that move. So are some altcoins, they're doing some big moves over the last few days and there is a genuine positivity in the market, and you'll see that when we go through some of the latest news. So with that, let's just get straight to the news right now for you, see what I've collected here for you today. Okay, so my first piece of news here is on CoinDesk, and it's now I know the crypto industry is here to stay. And this is news from a long-time crypto skeptic who once called for a ban, and he explains why he's organizing a high-level crypto conference at Duke. Goes on to say, as a long-time crypto skeptic, it may seem odd that I'm helping organize a digital assets conference at Duke University on January 2021. After all, I once wrote a Wall Street Journal op-ed calling for a cryptocurrency ban. While I continue to believe that the unbacked cryptocurrencies like Bitcoin provide no economic utility and impose societal costs that vastly outweigh the benefits, I also recognize that the broader digital asset industry is not going away. Lee Rayners is a policy director at Duke Financial Economics Center and a lecturing fellow at Duke Law. At Duke, he teaches cryptocurrency law and policy and is a frequent media commentator on cryptocurrency regulation. So he goes on to say, how do I know this? Well, for starters, I've been teaching and writing about cryptocurrency and assets at Duke for 6 years. During this time, the sector continuously evolved and defied all predictions, including mine. And this is the important point here. This history suggests that those arguing the ongoing crypto winter signals, the death knell of crypto, will similarly be proven wrong. He goes on to say, I've also spoken with countless Duke students from across campus, including students in our groundbreaking Master Engineering in Financial Technology program. And they are passionate about digital assets and blockchain technology, and they want to make a career out of it. These students are not motivated by a desire to make a quick buck or buy a Lamborghini. Rather, they find the subject matter intellectually engaging and see an opportunity to get in on the ground floor of a still nascent industry with great potential. He goes on to say, finally, I know digital assets are here to stay because leading figures and firms from the traditional financial system say so. Writing in the Wall Street Journal last month, Goldman Sachs CEO David Solomon said that he sees blockchain as a promising technology that is already changing how corporations raise money and how investors trade stocks. As evidence, he cites Goldman's use of a blockchain in client-to-client trading platforms and its underwriting of a 2-year, €100 million digital bond for the European Investment Bank with 2 other banks, all based on a private blockchain. Also last month, BlackRock CEO Larry Fink said that the next generation for markets, the next generation for securities, will be the tokenization of securities. We have already seen several high-profile examples of tokenization. Last summer, JP Morgan's Onyx Digital Assets blockchain-based network transferred tokenized shares in BlackRock Money, and in September, private equity KKR tokenized shares of a feeder fund for the main KKR healthcare fund. He goes on to say these developments may be a far cry from the purely peer-to-peer version of electronic cash envisioned by Satoshi Nakamoto, but they are not nothing. There's more details there if this one interests you. As with all the news bites, I'm only reading snippets and the main bulk is in the links, so follow the links to get the full information. But as you can see here, this is one huge skeptic that has changed his mind, and that's big news, really. Moving on here to, this is Bitcoinus. A Bitcoin analyst who predicted the 2012 crash warns of a huge Bitcoin reversal. The year 2023 is showing, at least in part, renewed investor sentiment on the Bitcoin market. The surge in market valuation can be attributed to recent bullish price actions in the market based on data by CoinGecko. Major cryptocurrencies, Bitcoin and Ethereum, are all experiencing a surge in price, with Bitcoin breaking through its $17,000 resistance level. The rising trend in prices, however, is not continuous according to CryptoCapital. The prominent crypto expert who correctly predicted Bitcoin's downfall in 2022 believes the current market rise is likely a bull trap. A bull trap happens when a trader or investor purchases an asset that breaches the resistance level. This is a frequent approach based on technical analysis. Despite the fact that most breakouts are followed by substantial gains, the security could swiftly make a U-turn. Now, even when Bitcoin surpasses $17,000, the pseudonymous analyst known in the industry as Capo tweets to his 698,000 followers that he anticipates a market correction. And there's the tweet there, if that would interest you. With the king of crypto leading the charge, CryptoCapital's view of Bitcoin is still bearish. And his recent tweet read, "Zoom out, ask yourself, why am I buying here? Is it because of fear of missing out? You are seeing random altcoins having random pumps, same as has been happening since the start of the downtrend, and you feel the need to buy. You could think this might be the bottom." So have a look at that one if that would interest you. A little bit more here on the bottom here. With the consumer price index data just about to be released this week, it remains to be seen whether the macros are in support of this crypto rally. But with Bitcoin facing a stronger resistance at 17,552, this rally that the entire market followed may be in danger of a massive correction. Long term, if Bitcoin continues to follow its 4-year market cycle, a rally led by Bitcoin could bring enormous gains for the crypto market. Short to mid-term, however, investors should keep an eye on the CPI data being released this week, as this would determine the US Federal Reserve's stance on the market. So an interesting two sides of information there, but generally it's some positive news. 2023 seems a little bit positive at the moment. So let's move on to the next piece of news. Okay, this article here is on Lifehacker. Now, I can't actually show you these videos, but I recommend you have a look at them anyway. So, especially if you're a newbie or a newcomer to this field, or even if it still confuses a little bit, because let's be honest out there, some of this stuff confuses all of us. The team at CryptoViewing get confused by all these weird, word-like statements all the time when it's talking about cryptos. So 6 of the best videos to help you actually understand crypto, and this is all done by Lifehacker. And essentially, you have to run through the slideshow here, and it's got the slides showing all the videos there. They're pretty good. I've had a look at them. They give a general overview, but have a look at that if you need to know a bit more information. And on Finbold here, the top 5 cryptocurrencies under $1 to watch in January 2023. Most discussions about cryptocurrency investment center on Bitcoin and Ethereum, and the other top 10 assets for newcomers to the space. Whilst these coins are well known in the crypto market, there are other cryptocurrencies with just as much potential as investment possibilities as blockchain projects in general that can be purchased for $1 or less. Each project has its own qualities and potential for success, and we will explore the 5 of the best cryptocurrencies you can purchase under $1 in no particular order. Now, I'm not going to read these, I'm just going to read you the headings on these, but read this information yourself and have a look at them. I have to be honest, and full disclosure here, I already have small amounts of investment in a lot of these already, because they just seem attractive to me. So the first one here is Cardano, that they said, is a good proposition. Polygon or Matic, VeChain, VET, Shiba Inu or Sheep, XRP, and I think that's it on the list. So have a read of those, have a look, see what they're saying. And if you're one of these people that have a small amount to invest, or if you want to take a little bit more of a gamble, I think some of these are good propositions. As I said, full disclosure, I have some of all of those other than VET. So yeah. Take a look and see what you think. Okay, you can probably hear the rain behind me. If you can't, then that's great for you, but it's absolutely pouring down here in the middle of a storm. But let's get straight to it anyway on the Cryptopolitan here. BlackRock includes Bitcoin in its global allocation fund. The renowned American investment firm BlackRock has integrated Bitcoin into its massive $15 trillion global allocation fund. With this step, BlackRock can acquire every Bitcoin on exchanges with a mere 0.32% of its total managed assets. The American multinational investment management company BlackRock has allegedly incorporated Bitcoin into its global allocation fund. And here's a text here detailing this for you to have a look at. BlackRock joined forces with Coinbase Global last August to provide institutional investors a secure passage for investing in Bitcoin. The establishment made some additional steps that established the Bitcoin Private Trust after the partnership with Coinbase Global. However, the trust is created explicitly for its elite clientele who have high expectations from their investments. Now read that again. This trust is created explicitly for its elite clientele who have high expectations from their investments. So if they're investing in this, you know that there's something to it. By integrating Bitcoin into its global allocation fund, BlackRock can create a revolutionary shift in the market. With its current assets, the firm only needs 0.32% to acquire every Bitcoin available on exchanges. And this could be an unprecedented opportunity for BlackRock and a major disruption for traditional investment strategies. So keep an eye on that, as we've been saying, and as I've been saying for the last year or so, I've been doing these news bites. Institutions and the people who are in the know are getting into cryptos, and they're getting into Bitcoin, and they're getting into blockchain technologies. Next piece of news I have right here is on TechCrunch. The Easy company has raised $14.2 million to build an easy-to-use social crypto wallet. There's a couple of pictures of it there. I think this is a great move. As I've been saying to you guys for pretty much a year that I've been doing this, the process out there at the moment for buying, trading, storing crypto safely, for the average person, is just way too hard. We need something like an Amazon genius idea of a one-click process to do this before it's going to see mass adoption. And that's what these guys are going for. So the Easy company has raised $14.2 million in a seed round and launched its social crypto wallet to help onboard more mainstream audiences. Easy aims to combine user-curated profiles with engaging social features so that people can search, navigate and discover the world of Web3 on their own. And today its beta wallet is available to the public on iOS and Android, and it's completed a 30-day private testing phase. The guys go on to say, we want to deliver to the world a new way to engage with Web3, but also a new digital wallet. This is from Kevin Swint, co-founder of the Easy company. They go on to say, a lot of Web3 products and services today are too technical for the everyday person to use. If you look at the products and experiences in Web3, they may be too technical and built by and for technical users. We are shifting this to build a consumer product tool, a tool which leads to different design decisions. The platform, which was demonstrated by to TechCrunch over Zoom, had a similar layout to social media apps like Instagram, through elements like showcasing of NFTs, where users can swipe to view both their own NFTs or NFTs for people that they watch, like Instagram stories. They've gone off about a few more details about this, but I think this is a great move, and this is the kind of stuff we need to see a lot more of before cryptos become mainstream. It's a great move, so keep an eye on that one. And maybe if you have the need, or if you want to try it out, download the beta, have a play of it yourself. The next one in here is pretty much my last bit of kind of paper-based, news, and this is from the Motley Fall, and this is 2 charts that show why I'm buying Bitcoin now. It goes on to say, one bad year isn't enough to shape up these long-term trends. In cyclical fashion, we find ourselves yet again in the midst of a crypto winter. And as they have in previous crypto winters, critics and naysayers contend that Bitcoin is dead, that it can't rise again, that is a Ponzi scheme heading to zero, and it will never recover. All of these jabs at Bitcoin have been occurring since it was created in 2009. And yet all it has done since is go on a historical run and become the best performing asset in history. They go on to say here, Bitcoin has been touted by some as a near perfect form of currency, even with its volatility, which is viewed as a charismatic of new assets that eventually wanes. There is reason to believe that Bitcoin will once again rise from the ashes and reward investors who are patient to hold out for the long haul. One of Bitcoin's key features is sound money is an inherent scarcity. Ingrained in its code is a hard limit. There will only be a maximum of 21 million Bitcoins in circulation. The only way this could be changed is if 51% of nodes running Bitcoin network were in agreement, and I don't think that will ever happen. It's one of the crucial aspects that make Bitcoin Bitcoin. That limited supply argument helped propel Bitcoin's price during the last 14 years. And since 2009, demand for Bitcoin has only increased, and it will likely continue as it remains resilient and it proves to be a viable store of value, and people around the world look for more sound forms of currency. So chart number 1, rising demand. Most investors who favour it today are drawn to it as a store of value, so to capture its increased demand as a store of value, below is a chart of all Bitcoin addresses that currently hold at least 0.01 Bitcoins, and it's currently sitting at an all-time high. And there's the chart there, and there's the years. You can have a look at this in more detail on your own. As you can see, the number of addresses holding at least 0.01 Bitcoins has increased the most early on in the token's history, but since then it has continued to rise even in the midst of a current crypto winter, at more than 11 million holders today. This metric has risen by 70% in the last 5 years and is at 3,000% since 2013. Talk about demand. Chart number 2, outstanding supply. So let's look at supply. The chart below shows Bitcoin's shrinking supply side growth. With only 21 million Bitcoin ever to be created, there can only be so many to meet the appetite of increased demand, especially considering that around 91% of all Bitcoins have already been mined. And there's that chart there. You can see the demand there from 2009 to where we are in 2023 today at 19.26 million. So there are around 19.25 million Bitcoin in circulation today, leaving only 1.75 million more to enter the supply until the year 2140. Given that near zero coin inflation, Bitcoin could benefit from increased demand and limited supply well into the future. Thanks to increased demand, Bitcoin's price has skyrocketed over the last decade, and I believe it will climb again as it becomes more scarce. That's why I'm a Bitcoin buyer right now. So that's a great article, very positive, and that's also why I'm a believer in Bitcoin. So leaving that, that's the paper-based news. Now, as with every week, as I tell you guys, there's some fantastic resources on YouTube. So I've got 3 great ones for you here. First one, Altcoin Daily here. This one goes on for 16 minutes, and the crypto bear market is about to pop. And this is Winklevoss's last warning. Very interesting information there. Have a look at that. There's some very dodgy but interesting things going on in the industry. Very informative, and one I subscribe to because they bring out daily content and it's fantastic. The next video I have here is from Coin Bureau. Again, another one I subscribe to every week, 2 or 3 times a week. They bring out content. It's a fantastic resource. This one's about crypto in 2023, an institutional report you need to see. This is why institutions get into crypto, and this is one of their internal reports. Have a look at that. It goes on for 44 minutes. I'm afraid it's quite long, but it's very informative. And the last one I have here for you today is Library of Wealth. This is an interview, just goes on for around about 9 minutes. It's pretty good. I watch these occasionally. I am subscribed to them. Good information on a regular basis. People have no idea what's coming, says the Binance CEO. So have a look at that as well. That's very interesting. So that's it for the News Bites this week. Thanks for your help and support. If you could just click the link, subscribe below, or even comment, let us know what you think about this stuff. That all helps us on a weekly basis. Take care out there. It's looking interesting, as we know. We've had some ups and downs. Bitcoin may go down again this week. Let's see what happens with the CPI index. But overall, the sentiment out there is very positive. Blockchain, crypto, and this kind of technology. So take care. Have a great week. See you next week. Namaste.